Are you paying taxes in two countries? Confused about tax residency rules? A tax residency certificate, TRC, can save you from double taxation and ensure you pay the right amount. Let's break it down. A tax residency certificate is an official document issued by a country's tax authority. It confirms that you are a tax resident of that country. This helps in claiming tax treaty benefits and avoiding double taxation. If you earn income in multiple countries, you may be subject to taxation in more than one place. A tax residency certificate helps you claim tax treaty benefits, ensuring you don't pay taxes twice and get lower tax rates on income. Not everyone needs a tax residency certificate, but if you fall into these categories, you should consider applying for one. Freelancers and remote workers earning across borders, businesses with global transactions, investors in foreign assets, expats and digital nomads with multi-country income. Every country has its own rules for determining tax residency. In general, most countries use a 183-day rule, meaning you must reside there for at least half a year to be considered a tax resident. However, some countries have additional criteria, such as strong economic ties or permanent home status. Let's look at the residency requirements for different countries. If you want the full table, please comment below. Getting a tax residency certificate requires an application to the correct tax authority. You will need to prove your residency, tax compliance, and economic ties to the country. The process usually involves submitting forms, ID proofs, and tax documents. Here's a look at how different countries handle TRC applications. If you need the full table, please comment below. When applying for a tax residency certificate, avoid these mistakes: wrong or missing documents, not meeting the residency days requirement, applying too late, not understanding tax treaty rules. Double-check the requirements of your country before submitting your application. A tax residency certificate can help you avoid double taxation, claim lower tax rates under tax treaties, prove tax compliance for banking and business purposes, get better financial planning and peace of mind. Now that you know the importance of a tax residency certificate, don't delay. Check your country's tax authority and apply today. Like, share, and subscribe for more tax-saving tips.